Hello dear traders, dear ladies and gentlemen, it's time for episode 16 in our MCA Trading Made Simple series. Let's do a little recap first. So we talked about the DAMA positions, stop hunting, the interaction of stops and DAMA positions in the first package of the series. Then we talked about time and range principle, pre-run counter moves, post-stop hunt principle, DAMA tolerance principle, squeeze modes, for hour reversals, net loss reversals, economic news and plausibility, option strike targets, auto gap zones, over leveraged DAMA positions, semi-smart positions. And today we're going to talk about the day chart moving average. So first of all, I would like to emphasize we do not use these statistical indicators for our own trading. We only have them on the day chart because the DAMA uses them. Okay. In particular, we're talking about the 200-day simple moving average, okay, and you will quickly see yourself there's a tendency for stops to accumulate above that moving average for DAMA short trades and below for DAMA long trades. And that's the reason why there's a tendency for the smart money algos to actually clean the moving average whenever they can, okay. Not only that, also some DAMA traders try to trail the stops along the moving average. So that's why the moving average becomes a target for the smart money algos. Okay, so there are at least three major functions. That is one of them. It also applies to the other moving averages. We have the 200-day, the 100-day, the 50-day. So the same applies to the faster moving averages. Now, we also see another interesting phenomenon, namely this one, where we suddenly see the price turning and attacking all the moving averages in one go, clearing them up, okay. For example, if there's a DAMA switch and so on, this can happen, and like an aggressive cleaning of the moving averages. And the third category would be those situations where DAMA traders try to trade the moving average crosses, and once the moving averages have crossed, there's actually a counter move by the algos to whipsaw those trend traders, okay. So this is a signal, so the DAMA tries to actually sell, but the algos see that and push the price up and kill anyone who tried to do a short trend trade, okay. So those are the three main functions. It's not very difficult to understand. It's rather simple. I think a good idea is to jump straight into this and to look at different examples. Let's do that. Okay. So the day chart from today from euro pounds, and here's exactly what I said before. Okay, we see the 200-day moving average. What happens? Look at that. Okay, it gets cleared, 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 cleared. These are all stop hunts. Okay. And as I said before, even the 100-day moving average, the same happens. So what I'm saying is always check the day chart for possible targets in that area. Okay, it's additional information, but especially if you see stops accumulated there, whether it's LTS or MTS or STS, these tend to be efficient targets. Okay. Let's look at some other examples. This is the other example I've shown you. Okay, look at that. The price went up. The moving averages are all bullish, okay, and then boom, the smart money clears out all the moving averages in one go, okay, and takes them out. This was of course related also to the DAMA longies being in profit, you know, and the shorties leaving the market and so on. But still, you know, like it's a complete clean of all the moving averages in one go. And here again you see clearing the day chart, 200-day simple moving average all the time. Okay. Let's look at this example here. So here you can see various things. I mean, one is even though it's news related, but you see like all the moving averages are in a bearish mode, so people think it's gonna break out, and then there's a big reversal to the upside. Okay, so this cross is whipsawed. again, we see attacking all of the moving averages in one go. Let's also look at this one. Here you see, like, again, all the moving averages being attacked. And you also see, yeah, look at that. Okay, bullish cross. Okay, the moving averages do a bullish cross, and then what happens? Okay, the price is actually pushed in the opposite direction. So all the trend traders trying to buy a bullish moving average cross get whipsawed. This happens all the time. Okay. But as I said, so in your own trading, this is not the dominant factor, but what I suggest is always watch out for possible targets, especially if the price is not too far away from the upper moving average. Yeah, pay attention to, okay, are they going for the 200-day SMA? It doesn't happen every day neither, as you can see, but at times it's very, very powerful. Like here, you know, shorties coming in, so they're gonna go up, take the stops of the shorties. And of course, you see LTS there live. Okay, you see SDS. This is now historical, but in real time, you're gonna see, you know, are there LTS? If there are LTS around those moving averages, pay attention to it, but because the smart money algos love to take those out if they can. With news, without news, but of course all the other principles which have been shown apply. Okay, like they will only do so if the DAMA money placed in the hands of the smart money, as always. Okay, I'll keep this one short. It's not very complicated. We only show those MAs on the day chart, and also from the MK block you can see many examples where they're actually clearing these targets. All the best, stay safe.